Has the AI bubble gone too far? Recently, a company known as Allbirds that did used to make shoes and, well, they did a mad job at it, has made national headlines by transitioning from a shoe operation to now focusing on becoming an AI focused company, basically swapping their business models entirely. And you might think, shoes, AI, what do these things have in common? Surely investors and markets as a whole treated this as a poor swap in execution. No, in fact, their share price shot up dramatically over 600% after the announcement. For those of you who are unaware what Allbirds is, as I feel a lot of people I've had conversations with have completely no idea even what Allbirds is, what they made, anything of the sort. Basically, they were an environmentally focused shoe company that at one point had a $4 billion valuation. That's billion with a B. And let's just say since that valuation, it has not gone so well. In fact, over time, their share price has fallen significantly and ended up in their 52-week low at about $2.15. And recently, last month, they sold all of their remaining assets for about $34 million. Again, starting from $4 billion and ending up at $34 million for all their hard work. As you can see, they have a long track record of success. The big conversation around Allbirds' pivot to AI, a sector that they have zero experience in, is of course that it draws comparisons to the likes of the dot-com bubble and also blockchain when crypto was first having its initial craze. This type of action where you see a company fundamentally switch business models, throw a dot-com, a blockchain, or an AI in the name, and with no fundamental changes and just simply an idea of what they're going to do, are rewarded handsomely in the short term. With blockchain, you saw this with the Long Island Iced Tea Company that then became Long Blockchain Corporation. Eventually, this didn't pan out well for them and they didn't really see any success in it, but there was some short term volatility and momentum traders took advantage of that. And then with .com, the company that often gets cited the most that really didn't innovate in the space was going to be Pets.com that traded at insane valuations, even relative to peers that it was underperforming. So again, this isn't a all that new thing to see. It raises questions about how much longer AI has to run in this current cycle. Because typically, when you see companies that don't provide anything to the space, have no expertise, they just hop into whatever is hot and trending right now, that tends to be towards the inflection point of a market. And a lot of people are questioning whether or not AI still has room to run in this current cycle. Similarly, in the AI space right now, we're already seeing companies that are basically at this point proven losers in the space and they won't be winning any sort of AI race. We already see them trade at insane valuations, completely different from what the fundamentals of the companies actually show. All of these are kind of signs that point to AI bubble poppage happening in the near future. But as I'll get into in a little bit, you can't really rely on that happening right now. Markets can run for an insanely long time, even if they aren't based on the fundamentals. One really interesting piece of this story to note is Allbirds is completely making a transition from not just their core business model, but actually the principles and the values of the company, which I find highly entertaining. A lot of you may have guessed that a sustainable shoe company pivoting to AI, specifically GPUs as a service, doesn't necessarily fit with the environmentally friendly focus that they projected for their shoe company. And you would absolutely be correct. In fact, there's going to be a vote coming up here pretty soon to scrap out all of the language in terms of sustainability and environmental focus so that the company can actually go through this transition. So, just to recap, not only are they scrapping their core business model at which again they weren't successful at all with, they're now going to be completely scrapping aside their morals as well and their values. Not saying that GPU as a service is evil or anything. I'm not one of those types of people, but it's just they are throwing what they have set out as their values and their core mission, and they've thrown that in the garbage as well just to try and save the company. So I find that quite entertaining, and we'll see how that plays out. Another thing that makes this transition unique in a sense is that Allbirds has zero experience even related to technology. Like, they aren't even loosely related sectors. You have a company that was competing with the likes of Nike and really underperforming that, to now they're going to be trying to compete with the Googles, Amazons, and OpenAIs. This is like almost like me as a finance YouTuber deciding one day, nah, screw this, I'm just going to make art on the internet. And mind you, I had no experience in art and I'm quite bad at it. But that is the literal situation that's going on. Except, at least with me, if I were to fail at making an art YouTube channel, I'd just get less views and move on with my life. For them, they lose a lot of money, they lose a lot of investors' money, and they scrap and kill their company. So this is, of course, a Hail Mary effort, but it's just such a different change from what they have any experience in that it makes completely no sense. Now to talk about what is the likely outcome from this transition in business models. A lot of people are discussing, and for good reason, shorting the crap out of the company. And while I think long term that's going to make sense, as I'll get into in a little bit, I think for the near short term, I would not be betting on Allbirds failing instantaneously. We have the great benefit of looking back in hindsight at how these stories played out, and a lot of them play out very similarly. And that is, in the short term, this 600, 800% jump up isn't likely to be the end, right? It could definitely be the end, but there's definitely room for this to run more. Now, does that mean, oh, you should put money in? No, please, dear God, don't put money in this company. If that isn't clear enough by my opinions, please, I'm begging you, don't do that with your money. But there is still potentially room to run. So typically how we see this play out is you see the early traders, the momentum traders, and the executives all get a great chance to cash out. And then long term, as this company will squander because it's going into an oversaturated market with dominant players in the space that are already proven winners, as it kind of sputters and fails, those who bought into the long term thesis or lack thereof are going to be left holding the bag all the way to zero. My guess is that long term, what we will see from this is, well, a very sad kaput. But it might have expanded the lifespan a little bit for the company as a whole. So there is some interest. They're picking up news headlines. A lot of people who didn't know what the company even was are now looking at it. Sure, it's to go, ha ha, and watch it die, but there is some media traction behind Allbirds. So what we might see is a slow sputtering. There might be some jump ups for people to take some opportunities and cash out, but hopefully not that many people get burned on this. Obviously, you're going to have a lot of traders and you're going to have a lot of institutions maybe buying into the trading. But when you look at a company that has no expertise in the business it's trying to jump into, that's competing with absolute giants like the Googles, Amazons, OpenAIs, and doesn't really have an idea of how to innovate the space, they just see the money and they're diving after it, that screams no signs of success for me. I've seen people throw out some wild percentages like 99% fail. It might actually be higher. I would put it a lot higher, honestly. I haven't seen anything that's wowed me from Allbirds. I mean, they failed at their core business model that they at least understood. Like, they weren't good running that. Now we're expecting the same people to suddenly become really good geniuses in AI in a race that's already kind of determined. At least we have the big players in. I'm just not buying it. And I really hope you guys aren't buying it either, especially long term. So, as I've already said, please do not put any money in this stock. That being said, if you're going to treat this like GameStop in the midst of the meme stock craze, this is not going to be a company that's suddenly going to wow with fundamentals. It's trading at a complete difference of reality right now. So treat it like it's GameStop, like it's gonna go down and crash at any point, and get out early. Make your amount of profit and leave. But please, please take it as a warning. Do not invest in Allbirds. This is not going to end well. Overall, thank you for checking out my video and my analysis of the current situation. It's definitely a crazy time we live in, and I know I've signaled this, I've sounded the horn multiple times on the AI bubble potential. But again, when I say that, I don't mean pivot and pull all of your money out. This is a great time to view your actual time horizon and put that into perspective, right? This is not the time to be panic selling, unless, of course, your time horizon is like 1 to 2 years and you want to significantly reduce equities, and all-time highs aren't a bad time to take advantage of that. You'd rather be trimming positions at all-time highs than all-time lows. Like, that's just a common sense thing. But overall, I greatly appreciate you checking out my video. Thank you so much for stopping by.